In what direction do your Bitcoins achieve a breakout? In the face of a diamond top pattern? If you're interested in knowing more about this, please keep watching. Bybit is one of the best exchanges I've ever used. It provides great market depth, a smooth user experience, and an impeccable interface. So go ahead and click the link below. In accordance with Know Your Customer, KYC, you'll receive $100 in cash for every deposit worth $100. What does that mean? It means you can just withdraw your Bitcoins without any trading involved. It's a limited time offer. So act fast, because it's only days until the end of the promotion. You're more than welcome to click on the link below. There might not be another promotional event like this again. As for BitGet, you may straightaway withdraw your BGB coins in accordance with KYC. Alright, let's take a look at the weekly K-line chart of Bitcoin. Why should we start from the weekly K-line chart? I actually mentioned earlier that this part is having 5 waves. If we were to study 5 waves based on the daily K-line chart, it'd be a bit difficult. It's because the daily K-line chart has a comparatively shorter time frame. I think it's more reasonable to study it according to the weekly K-line chart, and it's easier to identify the trend changes. As we can see, we're having the third wave here, right? In fact, when we're undergoing the third wave, I'm not saying this just because it's happening. When we were having the first wave, I had already said that we'd be having the third wave. In fact, a calculation done on this part shows that, no matter how much calculation we do, it has no end to it. Since it's not the end of the rising, we're definitely going to carry on with spot trading. However, this is from the perspective of the weekly K-line chart. We should keep our long position from that perspective. In that case, we need to continue the spot trading. With enough goods on hand, we're able to make a profit out of the price increase. Yet this is way less risky, because spot goods won't have a margin closeout due to price fluctuation. However, there's been some risk when it comes to the minor cycle. Since it's a contradictory situation, I choose to hold onto the spot goods, but I might place a hedge on my future goods. I think that's the best we can do. When we're having a long position in the presence of risk, we shouldn't sell off the spot goods just because of some risk. Because if you were to buy the sold goods, you would actually need the cost. It's because spot goods aren't as flexible as future goods. That's why I'm using this method. Okay, let's check out the 4-hour chart. Here you go. We actually see a very classic diamond top formation. What's a diamond top formation? In fact, I ever talked about it in the previous videos. If I'm not mistaken, it's in the videos about increased risk and dangers. Let's see what it's really about. First of all, we need to identify the border. This is actually a textbook diamond top formation. I seldom come across such a smooth diamond top formation. Let's take a look. This is what its structure looks like. We ever talked about this. Here's the structure that is perfect than ever. To me, it's, without a doubt, a diamond top formation. As you can see, it's truly a diamond top formation. Such a structure, as shown in textbooks, usually appears in an inverted form. If such a structure appears in a bull market, it suggests that the market has reached its peak, and the peak will cease to appear after that. To put it simply, we have a bull market at the beginning, and the price will go down after the diamond top. Of course, it wouldn't be as dramatic as my drawing suggests. As for the bottom, it goes like this. We have first a relatively minor volatility, and it gets bigger. When it reaches its peak, stagnation starts to appear. A diamond top at the bottom is usually followed by a reversal. In fact, the formation we have here is in line with the aforementioned conditions. Number 1, the volatility is getting larger, right? At first, the volatility is getting bigger, and then things slow down. It's actually like the market trend. It fits the description very much. Also, we're particular when it comes to the transaction volume. It should start with a lower than average volume, followed by an increase, before the volume declines again. It fits the description, no matter how you evaluate it. That's why I think it's indeed a classic diamond top formation. Let's do something unfashionable. I'm aware. It's a very silly yet simple method. Let's measure its target price. It's around 25,000. Guys, it's 25,000. That's actually the breakout we've tried so hard to achieve. Right? We did many tests to get a breakout, but to no avail. We've managed to achieve one eventually. A breakdown involving a diamond top would most likely cause stock price pressure ahead here, because a pressure breakout makes a foothold. In fact, we ever came across such a diamond top formation in the market prior to this? We did. Where is it? In Ethereum, Bitcoin has had one. Yet the one in Ethereum is more memorable to me. Where is it? It left a deep impression on me. Right here. The 4-hour chart. The 1-hour chart. That's right, this part. I was impressed by it. Guys, check this out. This part. It produced such a diamond top formation. I find it is perfect. It also fits the description I mentioned earlier. That is, the stock price isn't converging in the beginning. On the contrary, the price volatility is becoming bigger. Right? The price volatility is getting larger. And the price volatility slows down. It then converges into one single direction. Of course, the diamond top eventually showed an upward breakout. Yet this isn't the most likely thing to happen. A reversal it is. It's stated in all textbooks. Nevertheless, we should respect the market. If it's an upward trend, that means the market has made its decision. All we have to do is follow it. But here's a noteworthy phenomenon for me. Guys, check this out. Let the market progress a bit. Let it be for a while. Well, the market is showing an upward trend. Right? Yet it's achieved a breakout out of the formation. As you can see, it happened right ahead here. But there's no price surge. It's not some major breakout. Instead, there's been some volatility right here. Let's take a look at what comes next. As the volatility reaches its highest, here comes a breakout. As you can see here, even though it's no longer within the formation, a series of major surges does not ensue. That happens after overcoming the resistance. As you can see, there's resistance ahead here. Even though there's been a breakout, the resistance remains. Resistance here. And here. It's not until we achieve a breakout here do we start having a series of price surges. They're truly surges. Take a look at it. The following price surges are nothing but insane. We will go long here. It's considered a relatively conservative spot. Right? Let's drag it to the top. It's a return of 11 to 12%. It's considered decent. Since it's a 1-hour thing, your stop-loss order wouldn't be set too far below. Seriously, it's considered not bad. That you're able to make this much profit. In my case, when it comes to this kind of formation, I would first place a minor position size, say 40%, right here. At the border of the formation breakout. Here's the first position. Okay, let's make a note. The first position should be placed here, where the formation breakout happens. It's a minor position to test the water. When can we place a major position? Well, it's when we achieve another breakout. By overcoming the resistance, we then place our second position. In fact, I place all my positions one by one. It's impossible to place them at once beforehand. Because we need to wait for more stock signals to make sure it's going to be a successful deal for sure. That it has a higher yield rate. That's the better timing to make a deal with a larger position. I personally prefer this method. Here's the result for reference. Let's take a look. In fact, the price shows a convergence. A trend is most likely to appear within these few days, or even few hours. I would say, between the top and the bottom. The support of the latter is around 27,000. In other words, if it achieves a breakout out of this formation and exceeds 27,000, this is definitely the right time for me to do transactions. I have deals to make for sure. Also, all my positions are ready. And next, if it shows an upward trend, which is rather unlikely to happen, yet that doesn't mean it's not possible. It will happen at around 28,800. So if it exceeds 28,800, we can try to make more deals. But I personally would be very cautious. If I were to make a deal here, the position is way smaller than the previous one. In fact, there have been numerous risk signals, such as the divergence, the price surge prior to it, the stagnation, and others. Finally, let's take a look at the CME gap. As we can see here, we had the lowest price worth 27,000 last weekend. I bet everyone was in haste to make a short call. However, a look back at the previous data shows that CME provides a very high coverage probability. So the gap for this week is around 22,700. As you can see, it's gapless now. Even with the index activated, there was a gap below. But now there's none. It's because, even though the price drops to 27,000, it then bounces back to where the gap is. That's why we don't see a single gap on this chart. Here's a lesson to take from it. It's not that we're not encouraged to make a deal on holidays. Breakouts like this do happen on holidays. In fact, this weekend's breakout in the market has made the best timing for us to make a transaction. But most of the time, A breakout on holidays is usually a fake out. Like the one we've had this week. It's a fake out. Alright, thank you. You're welcome to like and share my videos. And subscribe to my channel. Turn on the little bell button to show me your greatest support. Thank you so much. Bye-bye.
Eyes in the sky, gazing far into the night. I raise my hand to the fire, but it's no use, 'cause you can't stop it from shining through. It's true, baby, let the light